Good morning. How's everybody doing? Let's see. WW said you missed just off the beginning. Just a couple things really quickly, and I'll read your chat here. W. We just broke through the monkey bars, whether we drew it half range or full range. We just broke through it, and you can see we're coming right back to it. But it looks like we're going to try to test it from above. If you're kind of thinking a Tony-esque level, we broke out through the monkey bar, said, hey, we can change postures. We're pulling back. We're retesting it from above, as that 0% line is going to try to act as a barrier. And so you can see that it's pushing higher. So right as I'm saying it, it's happening. And it looks like we're going to run for it. Now, we could hit that 50% of the half range at 45, 44, 48, and chop around through there and not really have the momentum. And don't worry about this shifting. We already have it drawn. So as it makes new highs, it's going to shift around a little bit and maybe get a little bit weird, a little squirrely. But as it does so, I am looking for the full range, and we could run all the way to 18.2 today, and let's see how that plays out. But probably should have just taken the trade. But it looks like we have the bullish momentum to continue this going higher, and we've got a lot of lift behind it. Now let me read that chat, and I'll come back and look at the thing with you, Ron, in just a second. Those are the ones that we talked about, right? In my video and in the live, I talked about Meta, Nvidia, Broadcom, Palantir, Google. But I'll throw in 3 more today. I'm going to throw 3 more AI stocks. If we believe the lift is coming and we're seeing that breakout now, we're definitely pushing higher pre-market open. Up and up and up and up. I'm targeting 18.2, so watch for that. So as we're pushing higher and higher and up and up and up, we'll look at 3 other AI stocks here early today. But we do want to watch the open before we do that. As far as WW, I said I missed yesterday and tried to catch up with your session last night. It says you had 57 minutes, but there's only 34 minutes. Moreover, Johnny was 2 hours long. It was a mini course. Yes. So yeah, yesterday the schedule was I was only on for the what was it, 37, 38 minutes. But yes, that is correct. There's nothing cut off there. Johnny did a special class that rocked it. It was awesome. What little I was able to catch because I was live was amazing. And lots of great comments from it, so go back and watch Johnny's session as well. But I'll be going back and watching the whole thing as well. It sounded like what I caught was great, and what feedback we got was that it was a very great session, so I'm excited to go see it. All right, so here we are trying to break through the 20% level. Now, this is our monkey bar half range, Brad. This is where it is. So that 20% half range, if it breaks through there, we're going to 18,145-ish. And that's not, I say it's ish because the 50% fair price has a tendency to chop a sloppa. It has a tendency to just kind of get there and go sideways for a little bit, kind of like what it did in the overnights over here. Look at the yellow line. Back and forth, back and forth, back and forth, back and forth, back and forth. It's not that anyone's in control. It's a balance. It's a balance for you. And so that's what we're going to look for up there at that 50% initially. But I do think we are going to probably try for and reach for the stars and try to hit that 18,200 in the Nasdaq. Now, what is driving all this? We know that it's AI. Of course, that's just the easy answer. AI, AI, AI. AI, AI, oh. Let's go and look at the major indexes because the Nasdaq has been lifting the most because it has higher weighting into the tech stocks. ES has had an explosive move the previous day, and most of that was overnight. Most of that was overnight. Yeah, WW Monkey Bars is just the TPO charts, time price opportunity charts. TPO charts. This over here is volume profile. This is time price opportunity charts. So one is based off time and price. The other one is based off volume and price. And often they match up because the more time you spend at a certain price, the more volume tends to be at that price. Not always. There's some disconnect and discrepancy there, but generally. So you can see we rallied, huge range going from 49.60 all the way up by the end of yesterday. And that was from the Wednesday's close, we'll say 49.70, to Thursday's close, 50.98. Massive, massive move for the ES, and so there's still lift here. We're seeing this bring the market higher and higher. Yesterday, when we look at the percentages, if we go from the close to the close, oops, let me zoom in. I can't see. Close to close. What's the percentage we got? 2%. And I calculated that. If you remember from yesterday morning's session, I calculated that we're going to probably see about 1.7%. And we got a little bit higher, but we also got a little bit higher than the Nasdaq as well. So NVIDIA pushed higher, and we saw that climb up to the top side. Okay, we're minutes away from the open. Which one? This one over here on the right? Kaltors? Let me take 30 seconds really quickly. I'm going to show you what I'm doing here. And I would encourage you to go back and watch the super long class, just because it's so long. No, to go watch the class on volume profile of tomorrow's levels today. It's a big class, but it explains the difference between volume profile and TPO or monkey bars. And so what this is doing, it's cumulative volume over, in this case, a month. And I can do the same thing on the day. This is how many days it traded. So when we had the highest number of days traded, theoretically, the highest amount of volume traded there as well. You can see that that's not always the case. So the left side's volume profile, the right side's time price opportunities. So as we're looking at that, the move up and down in the balance through there, generally speaking, if they have the same number of days or near the same number of days, this was matched number of days, but this is the first one to hit, then generally you'd expect to see higher volume at the days that you had more. So what this is doing, each one of these numbers says we traded 1 day there, 1 day there. So it counts up first 10 days, second 10 days, last whatever for the month. That was only 2 days for that month. 0 days, trading days in December that went into past 20. So you just simply say day 1, day 2, day 3, and it stacks up there, and your volume easily stacks there as well. So I use this to predict and project the next time frame, whether it's a month or a day or a year. What I have on the intraday chart over here is today. It should be just today. So this is like the today's cumulative volume profile. It's just showing us the volume that's happening. So with the overnight, all the volume was down here at 5,100. What's going to happen is we open right now. It's going to build a bunch of volume and a bunch of trading up here, and so this will have to adapt. So I'm not too concerned about this yet. But we get an hour into the day, and I expect this to be up here. I expect enough volume to overcome this, which means our fair price, or excuse me, our point of control, is what it's called in volume profile. Our point of control should pop up here and be about 51.20. After that, our value area will pop up there as well. This yellow bar is 68% or standard deviation of the total volume amount. David, you're supposed to say, "Yay, it's Blake." Not that we don't miss on, but you're excited that I'm here, right? Okay, here, I can get you the schedule here in a second as well. But here we go. We're down to about 1 minute before the market opens. We've got all this pressure pushing up, and a lot of this is being driven by, obviously, the AI world. But the fact that the ES is keeping up at the same ratio, about 2 times what NVIDIA did, is what we did in the S&P, that compounding component that NVIDIA was going to lift the rest of the market. Is very, very close. And so to be able to calculate the compounding and hit that number, I'm happy with that. This is not a game of precision when we're saying how much will NVIDIA, if it raises 5%, 10%, 15%, how much will that lift the market? Maybe he has them chained up in his basement. I don't know. How much will that lift the market if we're talking about one massive stock? Oh, thanks, Byron. Nothing like a fished for compliment, right? All right, here we go. And let's hear that ring-a-ding-ding. What do we got? 30 seconds? Oh, I thought I was already at 30 seconds. Okay. And I'll get into the long-term trends and some of the things that we saw. Gianni is highlighting some things. I don't know if he's planning on using it later on today, so I'm going to just touch on it because I did want to touch on currencies. And I want to touch on Bitcoin again in conjunction with these moves that we're seeing here. And like I said, I'm going to give you 3 new AI stocks that you might want to consider, which goes against one of my thoughts that I've been watching for. There it is. Here we go. Now notice the volume. Watch what happens. As the volume trades, because now we're not in the after hours, as the volume trades, see how the volume's popping up, popping up, popping up? As soon as we get the most volume here, this red line will jump to whatever is there. So as soon as we surpass, there's some higher volume. You can't see it behind the red line, but it's higher than this. So as soon as we get past this amount of volume, all this trading that's happening on the open will shift volume profile, and the red line will jump to here. The yellow line will be barely higher, and this other yellow line will probably be somewhere down in this area. So we can even watch that happen as it's happening and go from there. Let's see. Now I've got Mad World stuck in my head. I hurt myself. Okay. I've hurt my brain. Here's the schedule for today for those that are interested. Yeah, exactly, Dave. This is the reason why I hate reversion to the mean. I don't think it works. It's garbage. I don't like reversion to the mean because easily more than half the time the mean comes to you. The longer we're trading, the more currencies weaken in their purchasing power. Then the fact that these trends can continue, there it goes, almost there. Breakthrough. Oh, it's not breaking through. We should see it flip. That's weird. It should be up here. Unless that's a huge spike I don't see. Oh, there it is. It is higher. See, we have not surpassed the volume yet. What in the heck? That line's moving. How is that line moving? Something's broken here. There's no way that we should have volume increasing over here because we're up here. All right, we'll see it happen. Something's wrong with that number. But yes, mean reversions mean that's like saying that. Well, let's take someone taking tests, right? Hey, Marshall. Good morning to you. Thank you. Did my sound go out? I stopped talking for a second. Is my sound still there? All right. So as we're looking at this reversion of the mean, can you imagine saying, okay, what is the average math test score for a 6-year-old? And then what is that average test score for basic math? A 7-year-old, an 8-year-old, a 9-year-old, and 10 years. So what happens to the mean as something develops and grows and becomes worth more and understanding increases? You don't say, well, if when they were 5, they didn't get any right. When they were 6, they got 2 questions out of 100. When they're 8, and you just keep going through there and say, well, the average, the mean, is 5 questions out of 100. Well, now that they're in elementary school and going into junior high, you're going to start seeing they're getting 50s, 60s on this 100-question test, and you can't say, I'm going to revert to the mean, which is 5. No, their average is getting better, so the average lifts. And we should not have seen the volume increase down here. Something's wrong with that script, or that study, the volume profile. This should not have moved down here. And we saw that volume increase here, so some data wasn't being accounted for. But we'll watch it shift anyway. So here we are up at these highs. We broke through the 50%. We pulled back a little bit, but that 50% is the projected fair price from yesterday's trading. So as we look over here and we're through this high, this is really not a bias. It's just we're at a balanced area. We call this fair price on the time price opportunity charts or the monkey bars. We call it fair price. And so as it builds around fair price and volume builds, even if it does get up to 51, 51.50 up in here, we're going to look for, that would be a mean reversion look for if we trade down. So if we get up into this overbought area, we're just creating a distribution. And if we get two-sided trading up to here and back down to 51.50, 51.20, that could be the setup that we'd be looking for a fade. But right now, you can see we're building up all this volume and we're looking for it to go higher. Now, it's not moving very much. This, Brad, this would be a good justification, like you were talking about, to trade half ranges. Now, when I say half ranges, why do I go half ranges? Frequently, when we have these massive days, when the average days range, or ATR, for a single day is, say, 30 points on the ES, and we did 100 and something, we're probably not going to see that wide of a range again. So all you need to do to get a different measurement tool is to draw a new Fibonacci. Now mine is not Fibonacci numbers, it's a Fibonacci retracement tool, and you can draw that in there, and I always change it to yellow to tell me it's not my standard anchoring, and then trade half the range, half the distribution. So as we're looking at this, we can see that this is setting us up for a breakout that could say if you get above 51.24, you're going to go back to 51.40, and maybe the overbought area is going to be as high as 51.60. It gives you a quicker breakout, a quicker first target, but a further target on the monkey bars up here. For those of you that have gone through my futures class or my mastermind class on the stock market, when I talk about going from the breakout of the 20 to the 90, this 20% of half of a range is the 90. I don't know if you've ever kind of put those pieces together, but that breakout up to the 20% of half a range is the 90% level. And what have we done? Nothing. So no breakout. We've just pushed up to this highs. We're chopping around here. Let's go back to the Nasdaq really quickly, and then we're going to get into some different discussions. And before open, as Brad asked the question about doing half range, I drew the half range here. This is half range. Now, I think if NVIDIA is going to keep on running, we really could do the full, duplicate yesterday's type of range, and we could be headed all the way to 18.3. But I'm watching for this 18.2. Notice here, if we do half range, and I'll delete the other one. If we do half range, we broke out, pulled back, and broke out on the open. The 50% or fair price is up here at 18,144. The overbought, the area that I would consider taking profit, maybe not shorting, but taking profit at 18,180, 18,200. If we look at NVIDIA during the same time frame, we can do the same thing. We can quantify, based off of yesterday's price action, what we might look at in determining today's move. What does that look like? Yeah, Mitch, and I can get it to you in here in a minute. It kind of is, Dave. You know, and is there? So let me ask you this, and maybe you're saying this to say that noise is nonsense, kind of thing. But is there not math in noise? Are there not patterns? And even with the patterns, you think about a noise pattern that ends up, you play a certain frequency through sand, and it makes different patterns in the sand, right? And then you change the frequency, and then it goes like this. But as you're doing that, looks like a dog foot. As you're doing that, these are sketchy edges, right? The sand doesn't make a clean, perfect line. That's kind of the way I see the trading as well. That the edges of that is noise, or that noise is questionable as far as it's not a precision number, but oftentimes these become very precise. So yesterday we said we rallied up to here. We created this projected line, and you saw it shift. I don't like it when it does that because I'm not sure if I drew it right. But if NVIDIA continues to lift, don't worry about it shifting right now. If it continues to lift, we could be headed to 840, 850. The 50% fair price is somewhere near 830, and I could go back and hand draw that. But as we're trading up here, we are building up the pressure to stay above 810 as that trading and distribution goes through. Now, if we don't want to chase this, if we don't want to chase the NVIDIAs, if we say that parabolic move, I cannot jump onto a moving train. If this is the time I'm saying I just don't think I can chase that, what are some of the other stocks we can look at? We've already talked about Google and Microsoft and Palantir and AVGO or Broadcom, but a couple that you might not think of, and this is one that I hate to say it, is CRM. CRM is driven by, well, it's Salesforce. It is literally tracking client, it's a client software, right? Client management software called Salesforce because sales teams use it all the time, blah, blah, blah. But it is driven and has so much AI built into it now, and it tracks the AI, that Salesforce is now actually using AI for customer management, customer support, and they're pulling in the ability. Have you ever gone online and been chatting with someone, and you're probably chatting with an AI bot? Amazingly fast and responsive. So CRM is responding to that and climbing like this because it is connected to AI. It's a cloud-based customer management software, but now it's a customer management AI. And so the expectation is they're going to continue to grow their revenues, and we've got earnings coming up for them next week, Monday. Actually, Monday? Is it Monday? No, Wednesday. Wednesday. So coming up Wednesday. And so we can do an earnings trade as we get closer there, but this is one that could be something to lift the market or lift CRM as long as NVIDIA and others are continuing to climb. Another one you might want to consider looking at is, my brother-in-law worked for these guys for a while, and that's Adobe. Adobe got slammed down. It is not overbought. It's not up near the highs, but Adobe is also connected and using AI quite a bit. So as we're watching this, we're looking for this move. Let's do the same thing. I'm going to show you the time price opportunities really quickly, and then I'm going to get you that class link too. Let me get you that one first while I'm thinking about it. And let me do this. All right. Is this the right one? I have two documents, and it looks like this one. I have some other ones, but this is the basics, and you asked for the basics. I'll give you the basics, because this is the one that I know I have handy. So there's your one candle reversal class, okay? All right. And Brian posted the market profile one if you want to see the monkey bars. So Adobe, if we're looking at this and we go into the style and do the same thing I was looking at before, the idea would be we're going to go to the previous time frame. Now Adobe's had this massive range. So we'd go to the previous time frame. We would anchor from the low to the high, and we'd actually use the down to the penny what the low and high was. We'd look at this and say, where is fair price? Okay. Now I'm going to change this, because it is month to month. I'm going to do it in green. 630, 625, and 563.34. This is a month to month level. So the month to month level would be this. Now this is telling me that we have a tiny skew. The difference between the 50% and fair price is this little tiny skew, and it said you were skewed to the downside. Normally, I would say that was close enough, and we're going to trade half, or we're just going to trade this as fair distribution. When this happens, I generally, if I'm watching that happen, I will activate this and just move the downside just enough. If it's upside, I'd do the upside, but just enough to match fair price, leaving the top alone. So the top's still going to match that 636.25. I said this was an even distribution. As such, the next month, the next time frame, I expect it to trade. This is overbought, the top 20%. This is oversold. This is fair price, and if it breaks through this level, then I'm looking for a fair price down to 520.51. That's the next fair price or balance price. And I would have left this alone. The auto-generated tool is going to say there was a difference there. You had a difference of $4, so it was going to take the skew and duplicate the whole range with a little $4 skew. And that's going to make Adobe's monkey bars or distributions very, very narrow compared to what it probably should be. So that when it's really balanced, the auto-generated, the tool that does it, is going to struggle. But you can see if I go back to the regular chart, you had plenty of opportunities to trade up here. Said go short in February, pulled back, gave you another opportunity to go short without stopping you out, gave you a Bollinger Band breakout, came all the way down here, gap down, close up, which tells me I don't trust that. And here we are inside this overbought. So if we reverse, I would want it to get above 574, and I can just be really patient. February is going to come to an end next week on Thursday, at which point we'll get a new monkey bar. But I am looking at Adobe as an AI type stock that could give us an opportunity to buy in cheaper and benefit from the bullish move, the lift that comes from it. Now, this, they have, what is it called? Adobe Sensei is definitely expanding, and they're getting more and more growth out of that. So we'll see where it goes, but this is the one I would be looking at. The last one, and we'll come back and we'll springboard off the word sensei, and we'll talk about the Japanese yen in a minute too. But the last one, as far as an AI stock that we haven't really talked about, is Dell. Dell Computers. Yes, they are not a laptop company. Dell has diversified. The reason why Dell is awesome and HP kind of stinks it up is because one dug their heels in and sold their best tech away, and the other one said we have to adapt. So they've become a software, hardware, services type company, and they've been doing a lot of doing cybersecurity and changing, optimizing the performance of their computers. They've made a lot of shifts, and they do hybrid cloud environments that work here as well. And you can see, any question that they have growth. When's the last time any of us have looked at Dell? And Dell has gone from a year ago to these highs, 122%. It is not a laptop company. It's an AI company that happens to do hardware and software and cloud-based. So Dell is one that we're getting this leverage, and you can see the earnings are increasing. Now, we have earnings on Dell. When do we have Dell's earnings? The 29th. So next week, we want to do a Dell earnings trade as well, but we definitely have the lift. We definitely have this pushing higher and reaching these new highs. Let's do the same thing. Now, I'm going to use the studies that I have, and I'm going to edit studies. This is in the shared studies page. It's called this is the monkey bar, projected monkey bar tool. And what I'm going to do is we will change this to aggregation daily. So it's going to look once a day to get the data. And it's going to say, look at the last month. Use the last month to project forward. And we're just going to look at the last time period. So Dell told us to buy down here and down here. Oversold. It tagged that almost perfectly, and I love it when it does this. Tagged that almost perfectly and traded end zone to end zone all the way up. Now that gap would have been hard to chase, and right now we're trying to shift and go into a momentous move higher. If Nvidia is climbing, these guys are going to probably climb too. If Dell's going to keep moving higher, I've got 96.74 on the target, and probably 100. The overbought territory, the range, the target, all the way up to the top, 100. That's what I'm looking for. So Dell's got a lot of lift underneath it, and this is something I'm going to be looking at on little pullbacks to buy into this and possibly sell premium here because no one's paying attention to it, and yet it's still climbing. Hang on. What are we talking about here? Example, NVIDIA is proof that reversion to mean has a very limited application. I agreed. Because you have to just remember that the mean comes to you. The more price action, the more movement here, the mean comes to you. And it depends on the time frames as well, because if we're looking at this and saying, look at Dell for the last year, what's the mean? Well, if you're talking about just adding an average, if you're talking moving average, it's probably down here. If you're talking about linear regression, we could actually do a quick one here and just do a reversion line. Your mean was, at the time when it was climbing through here, 45. But you can see your mean, if we include all this data, is all the way up at 85 now. So you don't expect it to always go back to the mean. So if you said this was too high and it pulls back, you're not looking at that to revert to the mean. The mean comes to you. When this broke out after earnings, the mean was 59.71. Did it ever get back to 59.71? No. It made a new high, 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 and your mean now is 86. So yeah, you're probably going to hit that reversion to the mean at 87.30, but you will not be hitting 46. So from that perspective, all right. And I think, Jonathan, I think we're just trying to figure out what it really is going to do. It's like anything that's new, right? And then you have to ask the question, is this the industrial revolution all over again? Is this the computer revolution all over again? Are we saying everybody's going to lose their jobs like we thought with the factories? And then we just see we retrain, we re-educate, we grow, we expand. And I would absolutely not say it's the new Coke. I would say it's the new technology. It is a industrial revolution type technology. And that's what we're looking for. We're looking for the change, the expansion, the move. So, all right. Yeah, isn't that crazy, Michael? Why are you not looking at Dell? Why? It's amazing. All right. And by the way, HP, we'll use HPQ. See, this is what I'm saying. HP blew it. They did such a bad job. These two, HP was better than Dell at one point. And one comes out the victor, and the other one is a small hardware laptop creating company. Now they still have their enterprise machines as well, but they just did not get on the tech train to push to the next level. Okay. Now, all of this, all the growth, all the expansion, everything else like that. Let's talk about the dollar for just a minute. We're going to talk about the dollar. We're going to talk about volatility. And then we want to get into some long-term stuff. Yeah, but Dell was part of that too, right, Michael? Dell and HP were hand in hand. I was part of the dot-com world. I actually owned a data center. We had a data center. We had 28 programmers. We had a multi-million dollar data center in the 2000s. So I was right there. We had an EMC disk array and Sunware, and it was glass bead in our floor to keep from any static discharge. We did it all. We had a lot of HP equipment. HP was lending money like mad to people like us to get things to grow. But after all, you have to adapt. I'm a big believer. If you're green, you grow. If you're not, you rot. That's a Blakeism right there. I know there's other things. Yeah, Watson. And so Craig, we could look at IBM. I think IBM is another one that we're probably ignoring as far as AI, which could be an opportunity. So the dollar, you can see, if we're looking at this from the last couple months, the dollar has been gaining. We're in an uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Currently, for the month of February, we're at fair price, and we're kind of holding there. If we look at the last year, the dollar has huge swings, super low in July, super high in August, September, and where are we at? About center again. So the dollar is not losing ground like we would expect if we were seeing equities go through the roof driven by inflation only. This is a tech-based move. This is when I say tech, I'm not saying tech as in XLK or technology sector. I'm saying tech as in the horse and buggy was tech, right? There's any new innovation, maybe call that an innovation drive. So as we're looking at this, and we're looking at the pullback to the fair price, and holding through here, this is the fair price here. I have a fair price for the year projected up to about 106. So I'm looking at saying the dollar is probably going to try to lift more. And so the rally in equities is a good sign that it is founded. It's not just a weakening currency. However, what about the yen? The Japanese yen, I'm going to use US dollar JPY. Now this is going to be an inverse. This is the dollar versus the Japanese. The Japanese yen has tried to strengthen here November to January. But the Japanese yen has just lost its place as the world's third largest economy. It is weakening. Their economy is struggling. And we can see that we went higher highs, higher lows. And I'm going to leave some of this off the table because I believe Johnny was going to talk about this. But I'm going to show a tradable view of the yen and what I'm watching for. And the yen's all the way up here trying to approach the high. Now, if I do the 6J, that is the inverse, and maybe give you a better perspective. This is the yen listed as the base currency. And you can see in the futures market, the yen has lost and lost and lost and lost and lost. The yen is all the way down here. Now, this is versus the US dollar. So the question is, when a currency loses purchasing power, and we see it go from a high, and don't worry about the 788.3 all the way down here, 66.48. But that move is 17%. Now think about that for just a minute as inflation. If the US dollar is 17% stronger than the yen in less than a year, just a little less than a year, or the yen has lost 17% of its purchasing power against the US dollar, what would 17% inflationary pressure, because it is inflation, it's the purchasing power, we're just comparing two different currencies to do it. If the yen has lost 17% of its purchasing power, what does that do to its imports? How expensive do the imports get? And I would say, how much does it help their exports? Because it does. It absolutely helps their exports. A cheaper currency will help a country's exports and help them drive them through the roof. But the problem is, Japan has to import all of its natural resources. Has to import gasoline and oil. It has to import, well, plastics and pretty much everything. They have to import so many things. They're an importing country to create manufactured goods and send them out. But this yen weakening is tied directly to, let's take the Nikkei. So when we see if its purchasing power is getting lower and lower and lower, what do we expect to happen with its, in this case, US dollar based Nikkei? The Nikkei has reached a new record high. First time it's reached this type of record high in 30 plus years. And again, I'm going to hold back from sharing everything that we know about this because I think Gianni's going to cover a little bit more detail. But the Nikkei has gained 42%. 42% against the US dollar. Now extrapolate that. If the dollar has gained 17% versus the yen, and the Nikkei has gained 42% against the dollar, then we are seeing that the Nikkei has risen about 70% this year because of inflationary pressures in the yen. And if inflation's ripping high, they've got to consider raising rates. They haven't come off their zero interest rate policy that they've been in for almost 30 years. So you have deflation in China and what I would consider hyperinflation in Japan, and the Nikkei is at all-time highs. Normally, I would be looking at the Japanese yen and comparing it against the VIX. The VIX and the Japanese yen have had historically a very high correlation. If we go to the US dollar Japanese yen, once again, studies, edit studies, correlation, and we're going to add this correlation and compare it to the VIX. And what we look for is the space between 1 and -1. And historically, we would have said if the yen is getting stronger, the VIX would be rising, which means these should be inversely correlated. That correlation isn't showing. If we look at this over longer time periods, from 1 to -1, when the VIX is rising, going up, the yen gets stronger and pulls back. And again, that correlation is broken. And I think it's because of the VIX more than anything else. And Brian's pasting the currency code exposed. There's a currency class and some details on that. But this is where we're going to go into the question about what about Bitcoin. If Bitcoin is a risk asset, we get actually to a better correlation currently in watching Bitcoin as a risk asset. If we're willing to buy Bitcoin, Bitcoin's going up, we're willing to sell yen because volatility is low. And so we're going to expect this correlation to get back in line and be positive. So I would watch this even on the shorter time frame and say when you're above 0, oops, sorry, I meant to zoom to the 1 and -1. When you're above 0 and climbing, if Bitcoin is rising, sell the yen or buy the dollar and sell the yen. And therefore, when Bitcoin is rising as a risk on asset, you can be looking at buying the Nikkei. Because buying the Nikkei is, in essence, selling the yen, buying an equity market that is already rallying faster than the yen is losing power. And you'd be looking at something like Bitcoin as a reference to say, when are we above the 0? When are we seeing that positive correlation? It's not perfect, but where the VIX is kind of stuck in these lows and we're not really seeing the VIX respond the same way as we're seeing volatility in options, this would be something I could use as a substitute. All right. Just reading some chat here, one moment. Craig uses Watson, Dell bought EMC. HP was well run and profitable and great place to work when Bill and Dave were running, and then they retired and the bean counters took over. Yeah, the Palm devices and the Palm Pre, they could have been Apple, if you ask me. HP could have beat Apple. Their Palm devices, their Palm Pre phone, their Palm devices, because remember, they bought Compaq. Compaq was one of the first ones with the Compaq Aero and all the Palm OS. They were so far ahead. The Palm OS was so advanced compared to Apple at the time. They blew it. They completely blew it. They had the golden goose, and they didn't even let the golden goose lay the eggs. They didn't even eat the golden goose. They just killed it. They didn't say, "Oh, I was cutting it open to find the eggs." No, they just killed it for spite. I don't know. It was not a good thing. All right. Let's go back to the market, see how we're behaving, and then I'm going to get into some long-term trading, okay? So here's the ES again. We did half the range. You can see that we never broke out through that 20% level, but notice as well that our fair price, remember the red line, or point of control. Fair price is what we call it with the time price opportunities, and point of control is what you call it with volume, semantics or nomenclature specific to the indicator. But our fair price or point of control jumped from down here up to here. And so our yellow lines that encompass a standard deviation of the volume are here and here. So now we're finding this, below the point of control, which says slightly bearish posture. We are not through the zero. The zero is being tested as support. That zero is a point that we treat as a posture shift. And if it holds up through there, we're not expecting it to go much higher. Let's do the Nasdaq. And I do want to comment on your natural gas comment and play. I'm just saying they were so far ahead, lost in the woods. They were so far ahead, they blew it. There didn't need to be any competition. They blew it. Palm had apps that were so much more functional long before Apple. Apple didn't have their phone. We had the Palm Pre phone that was a touch screen with multiple apps. Years before Apple was even switching from their little dial on their iPod. They blew it. It's just flat out, they blew it. All right, look what the Nasdaq's done in the time we've been talking. Rallied up, touched your 50% fair price, came back down. When it broke through the zero, that says your posture shifted bearish. We broke through the 20. It should have come down and tagged this 50% level and the edge there. Call that the value area down here. We should see it. Should have seen it come down and test the value area. But I would also think we need to fill in this space. If we're going to stay below the zero, we're going to likely fill in this space. So we could get a short position potentially on the pullback. And if Nvidia is topping out for the day, I would say that you're going to probably want to fill this void here. Right now, we're filling the void at the 0%, which is the barrier. Trade above it, take bullish positions. You're trading below it, take bearish positions. We're below the point of control, so stay with the bearish mentality until you establish a new support level. Volume weighted average price, we're holding right here dead center. And we may be going into sideways before everything else is... Before anything else hashes out, we might just go sideways for the next hour or two. All right. I loved the Palm Pre. The screen was really soft. If you put it in your pocket with a coin, you had a scratch on your screen. I think you put it in your pocket with a gumball and you'd get a scratch on your screen. But the tech was cool. All right. Just watching that bounce to see if we're going to get anything out of it. Let me throw the natural gas chart up for you. A comment was made about natural gas, and we'll do crude as well. They're usually highly correlated. Comments about some things, announcement coming out. Kirill was talking about that, or someone was, right before they opened. So as we're looking at natural gas, look at natural gas in conjunction with its distributions. Dropped down, pulled back, broke out in the overnight at 169.170. Said go short. Your first target is 50%, which I expected to chop around, which it did. Touched it, bounced, broke through it, bounced, broke through it. 50% is fair price. Buyers and sellers are balanced in that area. All the way down to the oversold. So here we are in the oversold area. If we close back above this again, now that we've opened the day, traded down in here, if we close above there, the idea would be we should bounce back up to 165.50. Whether that's going to play into the long-term view, this is our month-to-month view now, our long-term view, and say this is a potential breakout of the oversold area to go back up to 186 or even to 220 is to be seen. If there's some big tech thing coming out or big announcement, if there's some big announcement, which way is it going to go? Is it a big announcement that we have the ability to produce it or transport it better, cheaper cost, or is it, hey, big announcement, our biggest supply is gone? I don't know. I don't know what I didn't see the news. I don't know what you're talking about specifically as far as the expectations, but we are in an area that is oversold. If it can break out of this, 186 is the first target, 220 is probably the second target, and if it breaks down, it'd have to clear this 147 first, and then I'd put 107 as the target. Do we think that the big announcement is going to say natural gas is so cheap and so easy to get a hold of that we're going to go from what has already gone from 350 down to 150 from 150 down to $1, down to 70 cents. I don't know. I have no idea, but I would question that. I'd question the ability to continue moving lower. Throw crude on here as part of that conversation. And then we got to go to the long term. I'm just reading the chat there. Yeah, they had the Newton device, but it was not, I mean, it definitely didn't stand out as a smartphone, did it? Yeah, there's lots of competition. Tons of competition in the handheld device space, but there was no competition as far as a smartphone. Pre was the only one, in my opinion. All right, let's yeah, I like it. Timothy says, where'd you go? I just lost your chat. You're saying we're thinking of it like the Luddites. I would agree. I mean, like I said, this is the thing, is that I'm trying to treat AI as like that, the Industrial Revolution and machinery, or like computers in the early 80s when everybody thought it was going to replace everybody's job. Sadly, there will be people that are become obsolete in their jobs and their positions. Others, there will build new jobs and new positions. Anything that you're going to see is always going to have, let's say, collateral damage to a market and its industry and economy. The problem is that this one is so crazy different. It's going to be insane. So, all right, crude, gap down, close down. What a move. Gap down, close down through here. Massive move. We went from 78.60 down to 76. That's a big gap. But as we're looking at this in the move through there, if crude is going to drop down into this area, natural gas is likely to drop lower as well. And then the question is, if we produce more crude, then we, generally speaking, are going to produce more natural gas as well. It's not even a question. It's a fact. Fact. The question was about, what about my chart? Are you talking about this chart specifically? This one I have here? I can give it to you. If you're saying, where do you get this? We've been talking about the TAC ADX in the futures room a little bit, so I have that on right now. Normally, I don't have that on. You can remove it if you'd like. I'm going to share this with you. This is today's grid. And as a reminder, what I do is I draw a drawing on this side based off the indicator, and then it appears over here. I trade, and I don't trade the 512. Let me put it to the right time frame. I trade the 1600 tick or the 3200 tick on the Nasdaq. So let me reshare this as a different chart. And I'll even put 1600 in there. And this shares both left and right side. It has all the indicators on there. And I don't really use the volume profile. I use the monkey bars, but I like seeing how the volume profile is building so I can kind of see where people are aligning. Well, Timothy, and what's the saying from when Genius failed? They were picking up nickels in front of steamrollers. Or as we've said many times in the industry, they were stepping over dollars to pick up dimes. All right. So we have the one candle reversal built in TradeOf 8. If you're using any other software that, you're not going to ever see them have monkey bars. You're going to see TPO charts, time price opportunity charts. I don't have this scripted. The script is open. If you want to see it, if you are a programmer, if you know someone that is a programmer, then get help. No, if you know anyone that's a programmer, you can go into the studies here and you can look at it, and you can go into the data and see all the studies. It's not locked; it's open completely. And if you know how to program, there's an error in the programming, or at least in what it looks at thinkorswim. That's why these sometimes will adjust. They should not adjust. It's pretty static. But I don't know of any others that have a forward projected monkey bar like I'm doing here. So, yeah, and you might have to, I hate to say this, if you can't get it programmed, if you can't find someone that can program it for you or in your platform that you already like, maybe AI can do it. Maybe AI can say, here, take this technology and apply it to TPO charts in this platform. And maybe AI can figure it out. Maybe. I just don't know. Maybe Chat GPT-5 can reprogram it into a different language for you. But in that class, I show you how to do it. So you might say, I'm going to only trade 5 instruments and I'm just going to draw them by hand. It'll take you 5 minutes, 10 minutes to set up your day, and 5 or 10 minutes to set up a month. And you can do that over and over and over again. So, all right. Let me show a couple other things really quickly because we're running low on time. I want this chart here. And long-term view, I want to address this really quickly because we do have to manage a couple of positions. Trends have not changed. We're still seeing things move, and trends have really not changed. This is the weekly chart, so we're seeing no change, no change, no change. Right here today, we're seeing the third and fourth change positions, but nothing big. At the bottom here, last week we had a change from the second and third position. It's this middle stuff that's actually shifting around. So the middle stuff is generally not going to have us chasing anything down normally. Our very top performing one is the Nasdaq, no surprise there, followed by the S&P, no surprise there. So if you have the top two in equities, you might say, okay, let's keep looking until we have one that's not equities. Third one's Dow Jones. Fourth one, as you can see, is the Russell. So all four of these way up high for the last quarter are equities. If you're going to diversify, we've got to go to the fifth instrument, and say, do we want to invest some in the dollar? And I think we do. And part of the reason why I think we do is because the dollar and the drive of money into NVIDIA, the drive of money into AI stocks, all the ones we've mentioned, Google, Microsoft, Meta. I threw up in my mouth saying Meta there for a minute. Palantir, Dell, Broadcom, Salesforce, Adobe, and even IBM. If you're going to be an international investor into these stocks, whether you realize it or not, your money is going to be converted from your euros, your pounds, your yen into dollars in that transaction. It's just like people thinking they're buying something with Bitcoin. No, you're not. You're trading your Bitcoin into dollars if you're using a card on the Visa network. If you are going to swipe your card, your Bitcoin card, your PayPal that's all crypto, if you swipe your card, you are not actually buying it with Bitcoin. You're buying it with dollars. And so to buy any of these AI stocks, you probably should be looking at long dollar positions. As you look way down here, we can see commodities are still the weakest, commodities are still the weakest, commodities are still the weakest. We have copper, gold, and general commodities still being the weakest. That is an indication that demand is still weak. This is a negative sign for the overall economy. I don't think Intel has hitched its wagon as strong to AI as some of these other companies. And NVIDIA is kind of known as the chip king. Judd, I just don't see the same expectation of being, we're not saying, hey, I'm going to run my AI on Intel. It's like, look at crypto. What did we see happen? It was all about Intel processors, AMD processors, Intel processors, AMD processors. And then I said, hey, I can mine just as fast, if not faster, using an NVIDIA graphics card. And that's what caused the shift. All right. And one other thing we were going to do, since I am running out of time, if we're going to invest in equities, are there sectors that we should be paying attention to? We saw the shift, and we saw tech drop down before NVIDIA. We saw it break down and cross 1 to almost 3 lines, if we call the S&P a line. We almost crossed 3 lines. We went from the number 1 and number 2, it was 1 back here and number 2 here, down to 4th. Middle of the pack, nothing really worth chasing. And we've sharply reversed, and all of these are climbing together. You'll see they're parabolic. This is the lift that NVIDIA is doing. All of this is that lift. Who's not lifting at the same pace? Energy. Who's not lifting as far as down here? Utilities. Right here, that was sliding after they turned. Real estate. So the areas that just, we're not really getting a say, hey, have you heard of that high level of AI real estate company? Ooh, have you seen how AI is revolutionizing utilities? They're going to be slow adopters anyway. XLU is going to be a very slow adopter to anything AI and anything that would increase their productivity and possibly reduce their costs. And remember, they can't even shift their prices without getting approval in most states. So these are the ones that are kind of stinking it up still, and I don't see the lift there. I'd say we watch for that. And we watch for the lift in these while shorting and fading these. If we can find those patterns and those setups, we can look to be bearish utilities and energy, which normally those are counter movers. But at the same time, they're both struggling. Oh, thanks, Dave. All right. I've obviously plucked a chord, touched a nerve for some of you with the discussion of HP. It's bringing back bad memories of the .com bust, or good memories if you work there, or bad memories because everything fell apart. Yeah, let's talk about metals, Andy, because I had gold up here earlier. Let's talk about gold from the short term and long term. And I want you to throw your mind back there with me to the discussion that we just had on or the highlighted discussion that we had on the yen. If the yen is going to weaken, and we see that we're pushing up to the 0% level in the short term, yeah, not time to buy. It's just good time to take profit if you're short-term trading. But we look at the big time frame. Oh, not that one. Where's my chart? And gold. Oh, good gravy. Get that out of there. There we go. Gold sold off and bounced back up, and it's still at the same price that we were all the way back through here. Here's the issue I have. Gold, this is my yearly marks, and this is my monthly marks. The month is at 50%. The year is trying to decide if it wants to stop being oversold. The year is pushed down through, bounced out, pushed down, bounced out. Theoretically, we should be at 2100 if we close back above this 20% level on a weekly basis, looking out for the entire year. So I do think 2100 is a potential target for gold. If we see it sell off and clear this zero line, this is the year, I believe that is your indication that deflation, world economic slowdown has occurred. So if you get through 1981, I do think 1868 is a target. Now, that's a very, very big long-term view. From the month we're at fair price. I don't see any real strength or weakness. However, if Japan is in a inflationary state where it's losing 17% against the U.S. dollar, and if we see inflation rear its head because a bunch of countries cut rates or are talking about cutting rates. And if everybody keeps pricing that in, at some point, if we see inflation kick back in, then yeah, 2100 is my target. But right now, what are we doing? We're holding. The U.S., largest economy, largest consumer, is holding and saying, we're not raising rates, we're not cutting rates, we're waiting to see, but we still know that inflation is starting to diminish. But if we see rates cuts and we see inflation return, 2100. If we see rates hold and we see it crack the infrastructure of inflation and go to deflation, disinflation, then gold is going to fall not just to the 50%, not just to 2000 for the month, but I do think we could go all the way back down to 1862. So I'm looking at 1862 and all the way up there, 2100. So if we look at something like, you say the metals, if we look at the metal miners, just remember XME is not going to always respond and react exactly the same way to gold. Right now it is, though. It's kind of in the same consolidation period. When gold prices are falling, they get hit harder than gold does because they can't produce anything, or it's not worth producing anything. If gold goes higher, it still costs them the same amount to produce 1 ounce of gold, whether gold's at $2,000 or $3,000 an ounce. Not that it's ever been there, but it costs them the same amount. And so when gold prices are rising, gold miners or metal miners really do well because they kind of have static fixed costs. The reason why I like the metals and miners in a long-term view is because a mining company just has to turn the key off. They furlough a bunch of employees, they turn the keys off and walk away. The problem with agricultural is you can't just say, I'm going to avoid planting this year, and as soon as wheat prices go up, I'll quickly plant and harvest. No, you always have to be planting. You always have to be harvesting. And so agriculture prices suffer more during a collapse and a shutdown than metals and miners. Agriculture, take a cow. A cow still has to be fed. A cow still has to be milked. Whether you're selling that milk, and I'm thinking of New Zealand and milk and dairy or dried milk that it ships to Asia, New Zealand's a big exporter of milk products. They can't choose that, hey, you know what, milk is cheap, let's just hold off. Let's just let the cow wait. Cow still has to eat. Cow still has to be tended to by employees. Cow still has to be milked. And so, same thing again with wheat, corn, rice, everything. Low prices doesn't mean you don't plant. You still plant. All right. So, metals and mining, I think, have a better chance to go up after if we don't see deflation. If we see deflation like we've seen in China, like we're starting to see signs in Europe and the UK, then I'd bet more on that going up. Agriculture prices, we have a tendency to want to eat, and they've rallied all the way back up through here. Notice this would be a potential bearish trade back down to the 50% level, and maybe that's something we can do in the short term on our, or meaning short term, meaning find a trade in the short term on a bearish agriculture price. But I'd probably want to dig into this, see if is it corn, is it soy, is it all of them that's putting the top in? And is that a strong enough bearish signal to take it back down to 2169? I think it probably is. Minimally, I'll look and see if we can do a short call vertical up at 22. All right. I'm coming down to the end of my time. The professor is going to be the one next here momentarily, and he's going to be taking over. His, let's see, I just forgot. I don't know if he gave me his topic. What's his topic? Hey. I think that's scheduled. I just gave you the schedule earlier. Let me get the schedule again. And I'll lay it out for the day. And paste that here. This is the schedule for the day. So next up is the professor. I'll be jumping over to the futures room. This is the schedule for the day, followed by Gianni, Brandon, Slim, Tony, and Corey. Bulls versus Bears. Historical trading days. Tendencies. Has there been a statistical shift that is the topic of the day. Historical trading days tendencies. Has there been a shift? And we'll be able to pass the baton over to him. He's going to be starting here in about 1 minute. Otherwise, yes, have a great weekend. I'll have to get back to the long-term portfolio, and maybe we'll have to do that on Monday since we ran out of time today. But yes, have a great weekend. Don will be back at his regular time, and I'll be back at my regular time after the professor next week. Have a great one.